The methodology that I'm about to show you has created me well over $100,000 this year in prop firm payouts and has created well over 100 funded members in my community in the past 12 months. Many members significantly doubled their strike rates overnight. Today is your lucky day because I'm going to be giving you everything inside of this YouTube video. What's going on, awesome people of YouTube? Jay here. I'm a full-time online entrepreneur and prop firm trader from South Africa, documenting my journey and the methodology that I teach here on my YouTube channel for you guys to watch, learn, and ultimately become your own independent and profitable trader. I'm a $500,000 prop firm trader. My methodology mostly consists of higher and medium time frame order flow and structure with lower time frame execution, giving you a crystal clear contextual understanding of what the market is giving you, allowing you to react accordingly and develop your profitable trade plans. I live stream with my community called MMFunded every single morning, going over higher time frame to lower time frame top-down analysis, giving each and every member that clear contextual understanding of what they can expect from price going into session that morning or afternoon. I will leave a link down below to those streams and that private mentorship, but without further ado, let's dive straight into today's video. If you've already seen some of the videos that I've already posted on my YouTube channel introducing you to the way that I approach the markets, as well as some insight into my methodology, you would understand that my trade plan consists of higher time frame and medium time frame order flow with lower time frame execution. And once price drops down to our higher time frame POIs, we start to look on the lower time frame, looking for our execution model to target those relative structural weak highs or weak low points. In a simpler form, I have to wait for price to mitigate my higher time frame POI, whether that is a 4-hour demand or supply or an M15 supply or demand zone. What I'm about to tell you is extremely important. Now, there is a big difference between a supply and demand zone and an institutional level. Every supply and demand zone that I mark out needs to have 4 criteria. Those 4 criteria being: 1, that demand zone or supply zone needs to be unmitigated, meaning price must have not previously pulled back and tapped into that zone. Number 2, that supply or demand zone needs to create a change of character or a break of structure. Number 3, that supply or demand zone needs to have resting liquidity above or below that supply or demand zone. And this is a mechanical model that I teach to my private members. We talk about the Asia LQ being high valuable S&D zone. Meaning, if a supply or demand zone is holding the Asian highs or the Asian lows in line with your higher time frame, immediate time frame, order flow, and structural context, that is a very high probable and high valuable supply or demand zone. And finally, number 4, that supply or demand zone needs to create a fair value gap or imbalance push. There's multiple terminology for a fair value gap. There's inefficiency, there's imbalance. They all are the same thing at the end of the day. Okay, so keep this in mind. These 4 criteria is what makes a highly valuable institutional level where money and orders are resting in the markets that have been pumped into price via large banks, financial institutions that have pumped a lot of money into the market at that point. So those areas act as a magnet for price to fulfill, to continue in the direction of order flow and structure. So that is simple enough to already understand. Now the problem is when price hits the higher time frame POI and price prints that lower time frame confirmation, everybody's busy entering and executing that trade plan. And that is actually going to start harming your strike rate, which takes us to this more realistic mind graph example. Now remember, price will always move in the form of structure, whether that's being higher highs, creating lower lows, strong highs, weak low points, weak high points. But keep in mind, when you hop onto the chart, price doesn't always look as clean as this. Within your structure, you'll always have lower time frame structure that occurs, being lower time frame higher highs and lower lows, changes of characters, more aggressive structure, following through, catering for that overall higher time frame structure. I've created a much more mechanical and rule-based way of approaching this, simplifying it for you. Kind of like a bit of a cheat sheet over here, and understanding this mind graph right here has allowed myself and my members to double their strike rate overnight exponentially. Okay, so imagine this being your 4-hour structure, this being one big 4-hour leg. Price creating strong lows, weak high points after that 4-hour pullback. And within that 4-hour structure, we have lower time frame, medium time frame structure and order flow occur. So in my mechanical rules and tray plan, within the 4-hour, we have a look at M15 structure. And what the M15 is printing for you will tell you where and where not to get involved. All right, so let's start from the beginning and go through this, and then we'll go through a few live examples. Price has most recently created that swing 4-hour break of structure to the upside with this 4-hour leg. What can we expect after every swing break of structure is for price to incur a pullback phase to mitigate supply or demand areas in this previous structural range. The mechanical rule that starts the 4-hour swing pullback is an M15 swing break of structure to the downside. And essentially what happens is, after that M15 break of structure to the downside, which will be the previous strong low that created the previous break of structure to the upside, once that low break structure to the downside, this mechanically becomes your 4-hour week high. And we can expect price on the M15 time frame to incur a bit of bearish order flow, respecting a supply chain, catering for that overall 4-hour pullback. The reason we use M15 inside of the 4-hour swing is because your M15 time frame is your 4-hour internal structure. Internal being all of the structure that occurs within your overall 4-hour swing ranges. We can even dive deeper and further into that, but I don't want to complicate things too much for you just yet. Within your daily structure, your 4-hour structure becomes your internal. So these would be your 4-hour legs, following through the daily structure. And within your 4-hour, we have lower time frame M15 structure. And the story that I'm trying to tell you is, once you're able and you've developed that skill to start complementing and correlating these 3 timeframes together, you will have an ultimate, undefeatable and unbeatable system in the markets. Which now the M15 has now switched bearish, supply and control. Most recent supply has taken out previous demand and the M15 strong lows, making this a new strong M15 high. And this is where the lower time frame comes in for execution. Ideally, what we want to see below a supply zone is liquidity resting for a sweep to happen, where we can start looking for the MMFunded entry models that I teach to my private members. In most case scenarios, what I look for is Asian liquidity resting below the supply or demand zones going into session, looking for a sweep of that liquidity into that supply, and either an M15 fractal change of character or a displacement fair value gap after the mitigation of that supply. All of this needs to be understood with your overall higher time frame context of what price is doing, being your swing, which is your 4-hour time frame, and your M15, which is your 4-hour internal structural time frame, and what price is doing. We can't just trade the Asian liquidity model, which is something that I teach also in this private bootcamp, without the understanding of your higher time frame. And you also can't trade the higher time frame, structural analysis and structural breakdown and context of what price is giving you without your internal and lower time frame confirmations. Because we can't just be buying off of these 4-hour demand levels, because price won't always follow through structure 24/7. We're going to have swing changes of characters and swing breaks of structures to the downside, bearish order flow, swing breaks of structures to the upside, bullish order flow. Maybe catering for the higher time frame, daily structure. So therefore, this is where breaking price down all the way from the daily to the 4-hour to the M15 to your lower time frame M1 and M5 time frame for your entry confirmations will always keep you on the right side of the market. So ideally what we want to look for as the M15 is now catering for that overall 4-hour swing pullback as we start to mitigate higher time frame 4-hour institutional level areas, we want to start seeing those M15 strong highs start breaking to the upside to get involved, to target those relative M15 weak highs and the overall 4-hour week highs. Because we expect that internal structure to stay bullish until we take out that swing week high. Because internal structure has now lined up with your overall swing structure. And this is ultimately the mechanical structural framework that I teach and use with my MMFunded community and with my members inside. Once you start to get your head around this and start to understand this, you will naturally start to see this as we hop onto the live charts without even having to mark it up. And we can then attempt to trade the different phases of what the market is giving you from our medium time frame POIs. Price can start to pull back after that M15 break of structure to the downside, after that 4-hour break of structure to the upside, which we can then start to expect. Price needs to occur a bit of a bearish order flow run on the internal time frame because we are due for that 4-hour pullback. After that M15 break of structure to the downside, we have that pullback into M15 supply. We get that mitigation, we jump down to our lower time frame, similar to what I've labeled out over here, and we look for our entry model that I teach inside of MMFunded. The challenging thing for a lot of traders that are approaching the markets with this methodology to make their trade plan as mechanical as possible is knowing when to get involved and when to execute and when to rather stay out of the market. And this is the mistake a lot of traders make. As price has just created that 4-hour break of structure to the upside, there are potential areas of old supply that price can mitigate and cater for those 4-hour pullbacks into the demand that is in control to continue targeting those weak highs. Now, a lot of traders are looking to get involved off of these supply zones, looking to go short. But you need to ask yourself, is this going to be high probability? Because going short off of these areas of old supply is counter trend and against the order flow. So do you get involved over here, or do you wait for your mechanical rules, which is your M15 internal IBOS, to identify the confirmation of that 4-hour pullback, to rather than get involved on that M15 IBOS in the M15 internal supply that is now confirmed being in control? And even then, when price pulls back to that M15 IBOS supply, are you going to get involved, or are you rather going to wait for your medium time frame change of character? And when price mitigates that M15 shock supply, continues in the direction, mitigates M15 demand, are you going to get involved here? Price then fails that demand, targets that M15 week low, creates a new supply. Are you now going to get involved on that M15 flip supply after that pullback? Price then continues to target those M15 week lows, creates that M15 break of structure to the downside. Price still catering for that 4-hour pullback. Are you then going to get involved on that new supply that is created after that third M15 break of structure to the downside? Price mitigates, creates a new M15 boss, new M15 strong high. Price then mitigates the higher time frame 4-hour POI. Are you going to get involved straight away over here? Are you rather going to wait for that M15 change of character to get involved on longs, or are you rather going to continue to wait for that M15 swing IBOS to break to the upside to confirm that M15 structure and order flow is now shifted bullish in line with the overall 4-hour time frame, to rather than get involved on that extra confirmation M15 demand? Or are you going to continue to wait after price mitigates that demand, creates that new M15 break of structure, price pulls back? Are you going to start looking to get involved over here? Or are you rather going to continue to wait for price to pull back into these areas of supply to potentially get involved? We then fail these supplies, create a new M15 fractal change of character. Are you going to wait to get involved on these areas? And these are the things that people find very hard to understand, is where to get involved and where not to get involved. Are you more conservative, rather going to wait for that M15 IBOS to the upside, or are you going to approach this methodology more aggressive with immediate M15 change of characters off the higher time frame 4-hour demand level, for example? So when do you execute or rather stay out of the market? Again, are you more aggressive, trading just change of characters off the higher time frame POIs, or are you more conservative, rather waiting for those M15 internal breaks of structures to the upside, to the opposite direction, realigning itself with the overall higher time frame 4-hour structure? And that's just looking at your medium time frame. When you're starting to look at your higher time frame and trying to get a bit more of a dynamic in what price is doing, which is what we call multi-time frame analysis, it can be very confusing to get your head around it and keep it mechanical as possible. I get that question a lot inside of my community when price taps into our point of interest. Are we going to execute? Are we going to rather stay out? Are we going to wait for a chock? Are we going to wait for the Asian liquidity model with a displacement fair value gap? When do I be aggressive? When do I be more conservative? And it's very difficult for me to give you a straight answer with that, because the truth is it can depend, because every single price action scenario is going to be unique. What's the 4-hour doing? What's the daily doing? Where are we sitting with the M15 internal time frame? There's so many different variables involved. However, I have now broken this down into a mechanical framework for you, into a phase A to D cheat sheet that will literally tell you what to do in every single phase of the market. And that's what I'm going to go through with you in the next part of this video. Ladies and gents, fellow traders, here it is, the cheat sheet and more mechanical approach of the phase A to D of understanding exactly where you should be getting involved in price and where you should not be getting involved in the market. Now, when I say this methodology has doubled the strike rates of myself and my members inside of MMFunded, there are hundreds of testimonies and funded traders inside of the community that are using this on their day-to-day trade plan, approaching the markets every single morning. So let me show you why this is a real game changer, and let's take our time in going through this so that you can have a thorough understanding of exactly where you should and where you should not be getting involved. So this diagram over here is the exact same diagram that we've just walked through and spoken about. Instead, I've added some neat colorful boxes that will give you an understanding of the different phases of where price is in that correlate with the information that I've added over here. So essentially what this comes down to is you need to figure out what phase is your medium time frame order flow currently in. And all you need to know is, are you pro or counter in your higher time frame swing structure, and are you counter or pro in your medium time frame internal structure? Immediately, the first thing you need to do is in your mechanical trade plan is identify your swing structure. And we've already identified that we are creating 4-hour strong lows, most recently, taking out those previous week highs, creating that 4-hour pullback, a new structural swing range with our 4-hour week high and our 4-hour strong low. So immediately we know we are bullish on our 4-hour swing time frame. So let's start off from A to D. We'll start off with phase A. So this is when you are pro swing and pro internal. If price action is currently in this area in the circle that I've highlighted in blue, knowing we've had that 4-hour break of structure, we've had that M15 pullback with the M15 internal structure shifting bearish, mitigation of the higher time frame 4-hour POI, M15 has now shifted bullish. And to identify what phase you are in, you need to ask yourself, when I'm looking for longs, am I pro swing and am I pro internal? So at this point in price action, if you're looking for longs, that's in line with your higher time frame 4-hour structure, because 4-hour structure is bullish. So therefore, you are pro swing. We can check that off. Again, ask yourself, am I pro internal? Well, the M15 internal has now shifted and gone bullish with a break of structure to the upside. So yes, M15 internal has now shifted from counter to pro because it's realigned itself with the higher time frame structure. Therefore, we are now pro internal as well. So that would be phase A of where you're lying in the market, which comes down to phase A is the highest probability from where your best trades will come from, because you're on the right side of the market on both swing and internal time frame. So essentially what this cheat sheet is doing for you, it tells you what the current objective of price action is. And this is super useful because then you know what to target, how to manage your expectations, and what confirmations you do and do not need to wait for. Now, there are lower time frame models that I have to keep private from this YouTube video because I have to keep some of the source and valuable information held back for my private members inside of MMFunded that will confirm, tighten your risk to reward, and increase your strike rate when getting involved in phase A, or as a matter of fact, any of these phases. So ultimately, what is the objective of phase A? Well, now that the internal has shifted bullish, realigned itself with the higher time frame bullish order flow of the 4-hour, the objective is to continue targeting these internal weak highs. And we now expect this internal structure to stay bullish until it continues to target those exposed weak swing structural highs. So that's your objective number 2, is to continue targeting these 4-hour swing weak highs. Objective 1 is to continue targeting these M15 internal weak highs, Being your second objective is your expectation is for the M15 internal to stay bullish and continue targeting those 4-hour swing weak highs. So now we're busy looking for longs in phase A, both pro swing and pro internal. But technically, we can also continue holding these trades until we target those 4-hour swing weak highs. So therefore, phase A, in theory, should be the highest probability out of all the phases because everything is in alignment with each other. And once you're in phase A, where price creates that internal break of structure to the upside, that pullback into the M15 internal demand areas, this is where we can start looking for confirmations to continue targeting these M15 weak highs and these overall 4-hour swing weak highs, as that is the two main objectives of phase A. Now, of course, you still need to know which are the high probability POIs to select to look for those confirmations on, which again is the private source that I keep for my private members. But if you already know how to do that, and my private members will know what I'm talking about, then you'll understand, such as a trader like me, I'm a little bit more aggressive. I will start looking for confirmations on my areas of interest immediately after we get that internal shift to the upside and we've aligned into pro swing and pro internal, understanding we're now in phase A. The only time that phase A could be exceptional and a little bit lower probability is once price has targeted that 4-hour week high. Because technically, if we're still internal bullish and we've broken that 4-hour swing high to the upside and we're still busy targeting those internal structural highs, technically that's still phase A. But keep in mind, your expectations then change. We understand that after a swing break of structure to the upside, we are due for a 4-hour swing pullback into that previous structural range. So our expectation will then be in the back of our minds that we can start to expect those M15 strong lows to be targeted to cater for that overall 4-hour swing pullback. So therefore, buying over here in these demand areas is a very different trade and quite a lot less lower probability than looking for longs rather on demand areas over here, even though they're technically the same phase. So why is that? Well, I've just mentioned it and broken that down for you, is after the 4-hour swing break of structure, in the back of our minds, we can expect those M15 strong lows to be targeted to cater for that overall 4-hour swing pullback. Phase A is simply understandable and in theory should be the highest probability phase to be trading in and therefore will allow you to get a little bit more aggressive in the market. Phase B. So again, this is where we're looking to take long positions in a market that is pro swing, however still counter internal, which would ultimately be at this area in the market. What is the objective of phase B? Is when we are anticipating the end of the swing pullback, but price has yet confirmed to do so because the internal structure is about to shift bullish but hasn't shifted bullish yet. So that is really the best time to be trading phase B. Phase B is the worst time to be trading pro internal structure and the best time to be trading counter internal because our expectations are now that price has had that M15 swing pullback. We do talk about mitigated higher time frame 4-hour swing POIs. Our expectations is now for the internal to start shifting pro from counter. So therefore, still looking to be on the pro internal side of the market, to be looking for shorts of these areas of supply is going to be low probability because our expectation after the mitigation of that higher time frame POI is for that M15 strong high to be targeted and to be broken to the upside. The internal is currently bearish, facilitating for that overall swing 4-hour pullback. And when is that internal shift to the upside most likely going to occur? Well, is when we've mitigated higher time frame POI demand levels in line with a higher time frame expectation, which is to target these weak highs. This is the area most likely that we can expect the internal time frame, which is our internal structure, to start shifting bullish. So again, this determines on how aggressive you are as a trader. Do you want to immediately start looking to execute longs on this higher time frame POI? Do you want to be slightly more conservative, rather wait for that M15 fractal change of character, putting fractal demand in control, which then increases your expectation to now target those M15 strong highs, and the overall expectation of the internal to start shifting bullish and pro trend in line with the higher time frame swing? Or maybe you don't want to trade phase B and you rather want to wait for phase A as extra confirmation to then get involved to continue targeting those M15 weak highs and overall 4-hour swing weak highs. Now, what you have to realize is phase B is not just going to be over here. Phase B can be over here. and also over here. Because looking for longs in these areas of the market is pro swing, counter internal, same over here. The same with the section over here. Looking for longs would be pro swing and counter internal. Therefore, technically, all three of these areas in the market is phase B. So you need to ask yourself, let's use the example of price action currently over here. All right, and we're busy mitigating, let's say, lower time frame M15 demand areas right here. We've mitigated these areas of demand. We've had that M15 fractal change of character to the upside back into this change of character demand. So this is where you need to manage your expectation. Yes, this would be phase B in where price action would currently be because it's pro swing. The pro swing is to continue targeting those weak highs if you're looking for longs, but it is currently counter internal because, well, these are now M15 strong highs. M15 internal is currently bearish, catering for that 4-hour pullback. But you need to ask yourself, is it going to be a good probability to look for longs here to continue targeting those 4-hour weak highs? Well, no, because price is still currently in premium areas of pricing in this entire structural range, which again is something that I talk about with my private members. We have an unmitigated, extreme, highly valuable institutional level on the 4-hour swing time frame. We haven't pulled back that far into the structural range, and therefore that is not a high probability phase B trade. So this is where you'd rather want to ignore phase B here, and price continues to pull back further, let's say into the discount of this overall 4-hour swing range, and price is busy mitigating, let's say, M15 areas of demand down here. We've now mitigated these demand areas. We've created that M15 shock with that change of character to the upside, fractal demand and control, that pullback into demand, and you're now looking to get involved on longs in phase B to continue targeting those 4-hour swing weak highs. In this scenario, it is slightly higher probable than the first scenario that I just broken down, simply because we have mitigated discount. But keep in mind that there is still more possibility for the pullback if price has not mitigated the overall 4-hour extreme. So therefore, once price has mitigated the 4-hour extreme, we can start to get really aggressive with phase B, because phase B will be best probability once price has mitigated the 4-hour extreme demand POI in that 4-hour structural range. So hopefully you're starting to see, as we're going along with the phases, it's all about asking yourself, what is the objective of where current price action is? Is the swing pro trend? Is the swing counter trend? Is the internal counter trend? Is the internal pro trend? And what is the objective of the internal, and what is the objective of the swing? So does it make sense to anticipate the end of the pullback right here in phase B, or right here, or ultimately right here in the higher time frame 4-hour demand areas? No, it does not over here. Over here would be slightly higher probability, but still not as good probability. But once price mitigates that higher time frame POI, then we have the best probability of phase B playing out, and we can start to get more aggressive with that. Let's quickly take another look at what phase B would look like and when high probability phase B trades would come into play. Okay, so let's use the example of bearish order flow. Price has just recently created a 4-hour swing, break of structure to the downside. We've created our 4-hour extreme supply level. The internal then starts to shift bullish to cater for that overall swing pullback. We mitigate that higher time frame POI, which, understanding over here, if you're looking for shorts, this would currently be phase B. You need to ask yourself why. Because you need to ask yourself, is the swing pro or counter trend, and is the internal pro or counter trend? Well, the swing is pro trend because we're looking to short with the expectation to target these 4-hour weak lows, but internal still remains bullish with our internal strong lows, so therefore this would count as phase B. So do we wait for that more aggressive M15 change of character to get involved for shorts, understanding that this would still be phase B because we have not taken out, because the internal still remains counter trend, or do we rather wait for phase A for that internal to shift pro trend and bearish? After that M15 pullback, we now have new internal weak lows. So our 4-hour lows are weak, M15 internal lows are weak. This then becomes a phase A setup. This is where phase B can be good probability because it's where your higher time frame analysis comes into play. Because you're coming into your higher time frame strong high and your higher time frame supply. So now that we're over here, what do we expect? We expect these M15 strong lows to be targeted simply because we've come to the 4-hour swing strong high and the 4-hour extreme supply to continue that bearish high time frame leg to the downside. So if that's going to happen, use your medium time frame to tell you what it's going to do. And this will then lead us to phase D after we've just created that 4-hour breakup structure to the downside. So we can start to expect that M15 internal structure to start shifting bullish to cater for that overall 4-hour pullback leg. Phase D occurs over here because you need to ask yourself, is the swing pro or counter, and is the internal pro or counter? Well, in this scenario, if we're looking for longs, it would be counter trading against the swing because these lows are weak. The eventual expectation is to target these weak lows. We're looking for longs right here. We're looking for longs, but the M15 is still bearish and hasn't shifted bullish yet. So we're also trading M15 counter trend. Potentially could be more aggressive change of characters to anticipate that 4-hour pullback. Personally, what I recommend is don't trade phase D until you're more consistently profitable and have more experience with this. So that's exactly what I've labeled over here as phase D, counter swing and counter internal, which would be at this area in the market. So as price has created that 4-hour swing break of structure to the upside, and we're now coming into older areas of supply, we can start to anticipate that 4-hour swing pullback to start. So whether we're looking for those fractal changes of characters that pull back into fractal supply, we're looking to short, but you need to ask yourself, is this pro or counter swing, and is it pro or counter internal? Well, in this scenario, it's counter swing because we're looking to short a bullish 4-hour swing market, and would also be counter internal because we're looking to short a bullish internal market. And theoretically, this would be the lowest probability phase to be in for your trades to run. And this is what most people avoid and the mistake that they're making. They're seeing, all right, price is busy mitigating, higher time frame supply. We've got that M15 change of character as confirmation. We can then now start looking to go short to ride price all the way down here. But this is where you need to understand your expectation and your structural context story of the market is that the 4-hour swing is bullish, demand is in control. So we're not going to expect to ride price all the way down to areas down here. I always recommend once price mitigates those older areas of supply or demand in a bearish market to cater for those 4-hour swing pullbacks, it's best to wait for that internal shift to the downside so that the internal has now shifted pro trend, which then leads us to phase C. And this is where 90% of the members in my community and members that I've seen publicly on other mentorships, other traders in my group, in my personal space here in South Africa, is 90% of traders lose 90% of their trades, is that traders lose 90% of their trades in phase D because they don't have that overall understanding of where they're lying in price. All they see is high probability supply with the displacement, fair value gap, liquidity buildup. All right, brilliant supply zone to start looking for shorts, but there's no understanding of your overall structural context of what the market is giving you. And for me personally, that was the biggest killer in my trading career, was constantly trying to catch these reversals, trying to catch those perfect sniper entries, when in reality, my trading game drastically improved and changed my whole life and career around once I started to remove this. Phase C is much higher probability than phase D because at least you now have the internal structure in your favor in the pro trend. Personally, I enjoy trading phase C and have a high strike rate trading phase C because now you can start to anticipate the start of that overall 4-hour swing pullback. So again, let's backtrack a little bit. We've now mitigated older areas of supply after that 4-hour swing break of structure. And as I've mentioned previously in this video, what can we expect after that 4-hour swing break is that 4-hour pullback to start. And we can anticipate that to happen of older areas of supply. But to confirm that, it's much higher probability to rather wait for the internal structure to shift in your favor pro trend, to put internal supply in control with strong protected highs and now newly created weak lows. So instead of just jumping straight in on phase D, rather waiting for phase C to play out to get involved. And this is where you just need to be a little bit patient. Rather let the high quality setup play out and the higher probability setup play out, rather than trying to force yourself to get involved on a lower probability phase D setup. Because what does the IBOS or the internal break signal? It signals the start of the overall 4-hour swing pullback. Because what happened was we've now broken internal structure to the downside. We now have a strong internal high here. So your expectations now become for price to respect these strong highs, continue targeting these M15 week lows, but also understanding the context of your swing structure. We have broken swing structure to the upside. This makes sense to start looking for shorts because we are due for that 4-hour pullback into more discounted areas of this range and extreme areas of demand. Because this will immediately allow you to start tightening your risk to reward, looking for your lower time frame entry model confirmations, and that's when it's highest probability. Because your objective has now been confirmed with that internal break to the downside to continue riding that 4-hour swing pullback. Because if you're getting in at the start over here, you have the most risk to reward to play with to get involved in this pullback. So let's say, for example, if you're trying to play phase C all the way over here and even potentially over here, you have a lot less risk to reward to play with, because as price is starting to now mitigate discount of this entire range and we're getting closer to the more extreme 4-hour demand areas, our expectations start to change and we can start to expect those M15 internal breaks of structures to the upside and phase B to start coming into play. And once price has mitigated the discount of this entire swing range or the extreme higher time frame 4-hour demand, and we have that M15 internal shift to the upside, that's when phase A comes into play. Because at this point in time, yes, you're pro-internal, but you're counter-swing. But where are you doing it? You're doing it far after the pullback has already started. You don't have much room to play with and get a good risk-to-reward trade to get involved with shorts. And you're doing it already after most of the pullback is already finished. So you're not trying to short here against the extreme 4-hour demand that is protected by strong lows. So you need to ask yourself again, what are your objectives as we mitigate this area of the 4-hour swing range? Is this going to be high probability to be looking for shorts here? No, not at all, because it's most likely here where the swing pullback is now going to end. So therefore, phase C is very different from trading it all the way up here as comparison to rather trading it down here, because if you're getting in early on phase C, you have a lot of room and risk to reward to play with to ride that overall 4-hour pullback. Every single phase and where you're lying in price action, you need to ask yourself, what is the current objective of price and what has been mitigated and what has not been mitigated? For example, over here, if we're looking for shorts to ride pro-internal, what is the objective? Well, the objective is for the internal to start shifting bullish to end that swing pullback, to continue targeting those M15 week highs and the overall 4-hour week highs. So therefore, your objective does not line up with your expectation, and shorts on these internal supplies will be low probability. One more thing I want to cover with phase C and D before we have a look at 1 or 2 line examples is if you're looking to trade phase D, this is the ideal time in the market where you really just want to look to get in and get out. And you also want to be risking a lot less of your percentage on your accounts and less equity, simply because it's both counter swing and counter internal, and theoretically is the lowest probability phase to be in. But once you have that internal shift to the downside and you have the internal on your side via pro trend, this definitely becomes higher probabilities to start looking to get involved. You've got more room to play with as you now have internal protected highs. Understanding we are due for that pullback, we have room to hold these trades a little bit longer, riding that overall 4-hour swing pullback. So let's take a look at 1 or 2 live examples. So over here, I'm on the Euro USD Euro Dollar 4-hour chart, and I'm just going to use this as an example of the higher time frame in the contextual understanding and alignment with the M15 internal time frame, which is our medium time frame order flow. Okay, so on Euro USD, now remember the mine graph that I've showed you guys really throughout this entire video. We've had our 4-hour break of structure to the upside, that 4-hour pullback into demand level, that M15 swing shift to the upside, that M15 swing pullback into demand, to continue targeting those M15 weak highs, M15 pullback, targeting those M15 weak highs to eventually cater for the overall end of the 4-hour pullback to target those 4-hour weak highs. And same thing. Okay, 4-hour break of structure, 4-hour pullback into demand. Mitigation of the 4-hour demand fractal ranges. M15 internal shift to the upside, which signals the 4-hour pullback is now over, M15 pullback into M15 demand to continue targeting those M15 week highs and the overall 4-hour week highs. So most recently, now what has happened with price? We've had that 4-hour break of structure to the upside. We're busy mitigating older areas of supply, which I can refine down to this candle over here, which I've just highlighted which I've just marked out the supply fractal range. So very simply, most recently, we've had our 4-hour swing break of structure to the upside, our 4-hour strong lows. Why? Because this is the lowest point after the pullback, after the previous break of structure that created the next break of structure. So mechanically and rule-based, this becomes our 4-hour strong protected low. So the overall 4-hour swing structure understanding and expectation after every break of structure to the upside, which this actually must now be labeled as a 4-hour boss, we are now due for a bit of that 4-hour pullback. How do we identify the start of that pullback? Well, we need to see the internal time frame start shifting bearish to cater for that pullback, where we can potentially get involved on phase C shorts. So on that note, we're just going to be having a look at this little pause or tiny little leg on the M15 time frame, and take note of how I'm not looking at older price actions such as these M15 breaks, these strong lows, or whatever you want to call it. This is done. It's old price action. It's not relative to what price is currently doing. And this is something that I try to install into my members in nearly every single stream that we have, because it's so important to look at what price action is most recently doing and rather learn to react from there than trying to predict price to pull back to these demand areas or the older M15 swing range or whatever it may be. It's so important to learn to react to current price than try and predict where it's going to go. Okay, so this is my main time frame where I spend 90% of my time on the charts is on our M15 medium internal time frame. But it's so important to remember that this needs to be complemented with the higher time frame swing understanding. Okay, so on the M15 time frame on EU, understanding we've most recently had that 4-hour break of structure to the upside, we're due for a bit of a 4-hour pullback. How do we identify the start of that 4-hour pullback? Well, we need to see the M15 swing structure shift bearish. So price would need to start targeting these M15 strong lows with that break of structure to put supply in control to cater for that 4-hour swing pullback phase. Okay, so if we have a look at the M15 structure, most recently we've had our M15 pullback week high. Week high targeted. This was the previous strong low. Okay, we had our M15 pullback start after this M15 internal shift to the downside, that internal pullback into supply to continue targeting those weak lows. We continued bearish with another fractal break, pullback into supply to mitigate further into this valid demand zone. We then created, after the mitigation inside of this M15 swing demand, the internal break of structure to the upside, putting fractal demand in control. So after this internal break of structure to the upside, this was then the potential signal that the M15 pullback is over. We now have a good probability of following through with the M15 swing structure to target those M15 week highs. So again, if we have a look at our phase B, phase A, B, C, and D, this was phase A. All right, this was phase D shorts, shorting against counter internal and counter swing. Phase C shorts would have been off this supply over here, looking for shorts off the supply after that internal break, understanding to continue with that overall M15 pullback. We then mitigated higher time frame demand, which looking for longs over here on a lower time frame would have been phase B, pro swing, but still counter internal. After that internal break of structure to the upside, looking for longs on that opposite side demand would have been phase A, both pro swing and pro internal. But with the understanding of where the M15 is currently, most recently we have this fractal low over here. If price takes out that fractal low, we most likely will get a bit of an M15 pullback into areas of demand. Following through the M15 pullback off supply, we can then start to expect M15 internal to start shifting bullish to continue targeting those weak highs. Keep in mind, now this is where you need to manage your expectations. Because we've had that 4-hour break of structure to the upside, the overall expectation is to eventually target this M15 strong low. to have that break of structure to the downside, which will then give us confirmation to look for phase C shorts on the 4 hour on the M15 supply, because we've now had that internal confirmation. So therefore that would be internal pro trend, counter swing, understanding that price is due for that pullback, 100% valid trade plan. And that was my actual trade plan that I discussed with my members this morning, is if price takes out this M15 swing strong low, we're going to go short, riding that 4 hour pullback. We'll let that play out today or within the next day or two and execute accordingly from there. But ultimately what I want you to learn from the video that I've created today, at this point in time when price created this M15 break of structure to the upside and price was busy sitting over here at this candle, I want you to start asking yourself, what phase am I in? Understanding we've had the M15 break. We have not had that internal change of character yet. So therefore looking for shorts would still be counter internal and counter swing. That would be phase D of this market. We've created that break of structure. We've mitigated old supply, but we have not created that internal break of structure to the downside as confirmation for the pullback to start. At the moment, it's just an anticipation and not a reality yet. That reality will kick into place once the internal shifts bearish, switching the internal from counter to pro, where then we can start to look for phase C shorts, which is exactly what played out after this internal break to the downside. We had that pullback into supply to continue with more of that pullback, which would have been valid to look for phase C shorts. As price started to mitigate demand in discounted areas of this entire swing range, as if I mark out the high to the low, okay, premium, equilibrium, discount, we mitigated a demand zone in the discount of this range. We then printed a internal break of structure to the upside. So as price was busy mitigating this demand, you need to ask yourself, what phase am I in? Well, in this scenario, it would be phase B, because if we're looking for longs, it would be pro swing, but still counter internal, because that internal hasn't shifted bullish yet, but the anticipation is there for it to start shifting bullish. Okay. Then on a lower time frame, we had a change of character, mitigating demand to continue through. We then shifted internally bullish after that internal break of structure to the upside, putting demand in control. And at this point in time, you need to ask yourself, what phase am I currently in? You can refer back to this chart or screenshot this. This would then be phase A, pro swing and pro internal, where we had that pullback into demand, which would have been 100% valid to look for longs to target this M15 swing week high. And then inside of my community, there's much more entry confirmation criteria inside of this demand to start learning how to refine your risk to reward to ultimately catch those 1 to 10s and 1 to 20 risk to reward trades. Alrighty guys, so this video is pretty much the core foundation of how I do things here at MMFunded and with my members. This blueprint, or you could say cheat sheet, has created hundreds of funded members this year, including over $100,000 in payouts from myself in prop firms using this methodology. I really recommend save this video to your watch later, save this entire ICT Bootcamp course playlist to your watch later so that you can watch it again and again, because I want you to watch it once and then I want you to watch it a second time to ultimately get a crystal clear understanding of what I'm trying to teach here. And if you still don't understand after that, I will leave a link down below to my Discord community where you have private 24/7 chat support with me. You can access my live streams with my members and I every single morning just before London session. We actually hopped onto stream now after a long 2.5 hour stream breaking down EU, breaking down GU, XAU. A lot of the guys actually executed brilliant longs on XAU USD this morning. Most are running full runners at between 6 and 10 hour profits. So well done to those guys by understanding what phase they're lying in and simply executing that trade plan with the entry models that I teach inside of MMFunded. So guys, I will leave a link down below to that. Please stay subscribed to this channel so that you can get a notification when I upload my next video in this bootcamp. Take care guys, and I'll see you in the next video.